Good evening and welcome back to Be Rich. What is affecting India is affecting the world. And what is affecting the world today is a lot of host of uncertainties. And I wanted to talk about them today. The first and the most uncertainty is about what the Fed is going to do. The Fed has dramatically changed its policy. The Fed has been continuously creating a scenario where it has been just assuring the markets that it will always keep the punch bowl there and they will not hurt the market. This has been going on from Alan Greenspan's book. That is, whenever there is first sign of trouble in the market, the Fed keeps on cutting rates. The point was reached when the Fed pushed rates to negative rates, hoping to stimulate growth. The Fed also believed for a long time that it had slayed inflation dragon forever and the inflation would never return and they could pursue monetary policy to stimulate growth. Unfortunately, it does not work. Economics is not a perfect science. It's a combination of art and science. There is a concept in economics called a neutral rate. A neutral rate is that interest rate which is basically a mythical point at which the economy continues to grow. The employment is very high and the economy keeps ticking over. Just before the crisis of 2002, this rate was thought to be at 4 or 5%. A combination of several factors had brought down that rate to further down. Basically, one can calculate a real rate by adding your inflation and nominal rates. But today, what has happened is the Fed has fallen behind the curve. The Fed should have moved much faster. The Fed kept insisting that the inflation that is plaguing the West is transitionary and it phase itself out. As it moved from one commodity and product to another, the Fed stood watching. In fact, nearly 8 months ago, even salaries levels in US started going through the roof, and that was the warning signal. But Jerome Powell decided to ignore it and kept the stimulus coming. The Fed's balance sheet expanded nearly 4 times in the last 8 years. Today, from less than a trillion in 2007-8, the Fed's balance sheet is $9 trillion. The Fed has done two things. It has kept interest rates extremely low and has kept buying government bonds, corporate bonds, and housing loan mortgages to keep the market interest rates very low. It has ended up overstimulating the economy. And the moment both Trump and Biden decided to give a generous dose of stimulus after stimulus checks, all bets have come off. Inflation is at 8.5%. The Russian Ukraine war, which should have actually not happened according to the Fed, made things worse because the crude prices have shot through the roof. And not only that, several important agricultural commodities such as cooking oil and wheat prices have also gone through the roof. This condition has already sunk several economies: Sri Lanka, Pakistan, Venezuela, which was already a basket case, and Turkey being the best examples. So there is no doubt that prices are going to go up. The Fed ought to have moved quickly. Now, Jerome Powell is expected to say in May that he will raise rates by 0.5% and start to shrink the 9 trillion debt. That is, he is expected to say starting 1st of June and running through to 2023 June, he will take away $1 trillion out of the asset market. Basically, the Fed will reduce its balance sheet from 9 trillion to 8 trillion. This will mean that there will a lot of free froth and floating money will disappear as the Fed really begins to tighten. Along with that, a liberal dose of 0.5% hike in rates, followed by another 0.5 if required. This is a 1.25% increase in rate. Normally, this would have been spread over 5 quarters, but this hike is now coming in just 3 months, where 0.25 is followed by zero point 0.5 and another zero point 0.5. How the markets will react is something we have to watch. The yen has already reacted, as I pointed out, and hit a 20-year low. The clear indication is the money from the rest of the world will start moving into America very quickly. It is my estimate that once the rate hikes seep through the system, gold prices will also correct in US dollar terms. While all this is going, another form of rogue capitalism is on at Wall Street. Twitter has been struggling with the ad and other related issues which it has not been able to correct. Even though it is the most popular social media space, it has not been profitable for a long time, in the sense expected profits have not come and the board has not been able to fix the issues. So it was a sitting target for somebody like Elon Musk. Elon Musk is now acting like a saint, which he is not. There have been cases where employees have been punished for showing dissent, both at SpaceX and Tesla, and he has no dissent or no criticism of him or his companies in the same Twitter. But today he is now preaching about free speech and absolutism. Basically, it is a free market libertarian trying to influence the world's largest social media space, which creates a lot of influence. He is talking about less moderation. The problem for the board is the market is not valuing Twitter the way Elon Musk is. Elon Musk has offered $54 per share or $54.25. He has said he has $46.5 billion ready to buy Twitter. Twitter's price, including a surge in price when the general market has corrected, is at $48. There is no way the market is pushing up the price of Twitter to 54. The market believes that this deal will not happen, but the Twitter board seems to have started negotiating with Elon Musk because he has started in turn to make presentations with big shareholders. He is going to make an offer for tendering of shares very shortly. The ability to raise $46.5 billion, an obscene sense of money, is clearly a reflection of what I talked before, the irresponsible Fed, which has left so much money hanging around, and a consequence of it correcting its balance sheet is not being paid by the super rich like Elon Musk, but by countries like Sri Lanka and Pakistan and Turkey, from which capital is flowing. Just imagine if the same $41 billion finds its way to Sri Lanka. Sri Lanka would have solved its problem, and more than several millions people misery would have ended. But such is the idiocy of markets when Fed plays footsie, is that millions struggle for fuel and food, and here is a capitalist willing to pay as if large publicly listed companies are his toys. This is what happens when a regulator thinks he can keep fixing markets forever. Regulators should do their job, not try to play the God. The Fed tried to play God, and the consequences are being faced in distant places like Sri Lanka and in a social media company like Twitter. Thank you for watching. Be rich. If you like this content, kindly subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be able to receive notifications when we put out a video. If you do like this content, kindly share it among your friends and relatives and urge them to subscribe. Once again, I thank you for supporting Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.